Stop looking at the price ticker. Turn it off. It is a lie. It is a digital hallucination broadcast by a bankrupt system to keep you sedated while they strip the carcass clean. You are staring at a screen, waiting for a signal, but you are already standing in the middle of the crime scene. The global economy has just flatlined. The doctors are lying to you. They are pumping the body full of stimulus and debt to make it twitch, to make it look alive. But the heart stopped beating 4 years ago. And the cause of death? It isn't inflation. It isn't war in the Middle East. It is the sudden, violent disappearance of the one element that keeps the modern world from collapsing back into the Dark Ages. Silver. We are not running low. We are not facing a shortage. We are terminal. We have entered the kill zone. The physical inventories that underpin every missile system, every solar farm, every electric vehicle, and every smartphone in existence have evaporated. They are gone. Scrubbed. Stolen. 60 million ounces. That is the number on the tombstone. That is all that is left in the registered vaults of the COMEX. It sounds like a lot to the uneducated, but let me translate that into the language of survival. That is less than 3 weeks of global supply. The entire Western industrial civilization is hanging by a thread that is 3 weeks long. And the shears are closing. Do not scroll away. Do not retreat into the comfort of your normalcy bias. That comfort is exactly what the predators are counting on. They want you asleep. They want you focused on the political circus while they secure the lifeboats. Because when this window closes, and it is closing as I speak, it will not slam shut politely. It will guillotine the wealth of everyone holding paper assets. I am going to show you the autopsy of the financial system. I am going to walk you through the 4-stage mechanism that precedes every catastrophic resource reset in human history. Hit subscribe and be a protagonist in waking people up and help get word further. We saw it with oil in the 70s. We saw it with palladium in the 2000s. And right now, the red lights are flashing for silver. This is not a prediction. This is not a theory. This is a tactical alert for a mathematically inevitable event. You are being hunted. Inflation is the weapon. Debt is the cage. And silver is the only key out. But the key is melting. Let's tear down the facade. Let's look at the data that terrifies the central planners. Global silver inventories on the exchanges are down 60% in 4 years. You are watching a bank run in slow motion. But instead of people lining up for cash, it is massive industrial conglomerates lining up for metal. Solar panel demand is cannibalizing the market. By 2026, the solar industry alone will swallow 200 million ounces annually. That is up from 85 million just a few years ago. This is where the narrative breaks. This is where the mainstream media lies to your face. They tell you supply will catch up. They tell you markets are efficient. Markets are not efficient. Markets are violent. When industrial consumption doubles in less than a decade while supply stays flat, you don't get a price adjustment. You get a massacre. You get panic. You get a price that disconnects from reality and goes vertical. For 5,000 years, silver has been the people's money. It is the only commodity that is simultaneously an irreplaceable industrial component and a monetary shield. When exploding industrial demand slams headfirst into a monetary system built on infinite worthless debt, the result is an explosion. Now, before you think this is clickbait, let me be clear. This is not prediction. This is pattern recognition. There is a 4-stage mechanism that governs every commodity supercycle in history. Silver is now in stage 3. The outcome isn't uncertain. It's mathematically inevitable. Here's how it works. Stage 1. Abundant supply creates complacency. The resource is cheap and available. No one explores for more. The system assumes supply always meets demand. Stage 2. Demand surges, but supply can't respond. A new use case emerges. Solar, electric vehicles. Mining takes years, decades to expand. Geology doesn't care about forecasts. Prices rise slowly at first. Stage 3. Recognition of structural deficit. Markets realize supply won't catch up. Inventories drain. Shortages appear. Paper markets lose control. We are here right now. Stage 4. Price dislocation and panic. Governments stockpile. Industries hoard. The price doesn't rise, it detonates. I'm going to prove this pattern to you 3 times using 3 completely different historical moments. And when you see it, you can't unsee it. Oil. The 1970s. Stage 1. 1945 to 1970. Oil was cheap. $3 a barrel. The entire post-war boom assumed infinite cheap energy. America was drunk on V8 engines and suburban sprawl. Stage 2. Demand exploded. Europe rebuilt. But U.S. oil production peaked in 1970. America became a net importer. We became vulnerable. Stage 3. October 1973. Yom Kippur War. OPEC embargo. Oil prices quadrupled in weeks. Not just the embargo, it was the brutal realization that cheap energy was over. Gas lines formed. Production slowed. Stage 4. Oil went from $3 to $35 a barrel by 1980, 10 times in a decade. Inflation ravaged economies. Central banks lost control. The mightiest military on earth was brought to its knees by geology. Pattern confirmed. Wheat. Irish potato famine. 1840s. Stage 1. Ireland's 8 million people depended entirely on potatoes. Cheap, abundant, taken for granted. Wheat was unnecessary. Stage 2. 1845. Potato blight from North America spreads across Ireland in weeks. 40% of the crop destroyed in one season. Now, here's where it gets dark, and this is the key lesson for silver. Stage 3. By 1846, the British government understood this was a multi-year collapse. But here's the twist. Wheat was available. Grain existed, but prices spiked so violently that the poor couldn't afford it. Physical shortage created price dislocation so extreme that available supply became inaccessible. Stage 4. 1 million dead, 2 million fled. The market didn't fail because there was no food. It failed because price destroyed purchasing power faster than relief could arrive. Palladium 2000s. More recent, more financial. Stage 1. Throughout the 90s, cheap, boring, ignored by investors. Stage 2. Early 2000s. Emissions regulations tightened globally. Palladium became preferred for catalytic converters. Demand surged. Problem? Palladium is a byproduct. You can't just mine more. Supply equals structurally inelastic. Stage 3. By 2019, 8 consecutive years of deficit. Inventory is gone. Russia supplied 40% with no incentive to flood the market. Paper contracts try to manage it, but physical markets decoupled. Stage 4. $500 an ounce in 2016 to $3,000 by 2020, 6 times in 4 years. Now, let's apply this exact mechanism to silver. But I need you to understand something darker. Something the other analysts won't tell you. The silver market isn't just tight. It is being systematically drained in a geopolitical act of war. While you are watching the S&P 500 hit all-time highs, look at where the physical silver is going. It is leaving the vaults of London. It is leaving the vaults of New York. And it is landing in Shanghai. The Shanghai Gold Exchange is trading silver at a premium of 10% to 15% over the Western price. This is arbitrage. The East is sucking the West dry. China knows what is coming. They are building a solar empire. They control the refining. They control the manufacturing. And now, they are cornering the physical metal. They are trading their paper U.S. Treasury bonds, which they know are worthless, for physical silver. They are preparing for a post-dollar world. And when the music stops, the West will be holding the empty bag, and the East will be holding the metal. This adds a geopolitical accelerant to Stage 3. It's not just industry versus mining. It is empire versus empire. Stage 1. Complacency. For 40 years, silver has been absurdly cheap. In inflation-adjusted terms, silver today costs less than 1980. 45 years of monetary expansion, industrial growth, tech revolution, and silver is cheaper. Why? Because the Western banking cartel suppressed the price to protect the dollar. Stage 2. Inelastic supply meets surging demand. In 2010, solar installations were negligible. Today, solar is the fastest-growing energy source globally. Every crystalline silicon panel requires silver paste. No substitute matches efficiency. And here is the thrifting wall, the technical detail that kills the bearish argument. For 10 years, engineers tried to use less silver per panel. They called it thrifting. They succeeded for a while, but they have hit the limit. Newer, high-efficiency panels, Topkin and HJT cells, actually require more silver, not less. We are moving from 10 milligrams per watt back up to 15 or 20. The efficiency war in solar demands silver. You cannot engineer around the periodic table. Physics is not a negotiation. Consider the green paradox. This is the irony that will destroy the global supply chain. The very governments that are printing trillions of dollars to save the planet are simultaneously engineering the collapse of the resource market. Every time they pass a subsidy for green energy, every time they mandate a new solar farm, they are placing a massive short order on silver. They are subsidizing the demand with infinite fiat currency, while simultaneously strangling the mining supply with ESG regulations and permitting nightmares. It is a suicide pact signed in ink, but paid for in bullion. They are printing paper to chase metal. This is not just bad economics. It is a collision course with reality. When the price explodes, these green projects will become insolvent overnight. The wind farms, the solar fields, they will stop dead in their tracks, not because of politics, but because the raw materials are unaffordable. The transition to net zero will hit the wall of net zero silver. The math. The IEA projects 400 plus gigawatts annually by 2025. That's 200 million ounces per year for solar alone. Add electric vehicles, they use twice the silver versus gas cars. Add 5G infrastructure, medical devices, electronics. Industrial demand is hitting 1 billion ounces per year. Global mine production peaked at 880 million ounces in 2015, now flat to declining. Why? I'll explain, but first understand this. 70% of silver is a byproduct of zinc, lead, and copper mining. You can't just mine more silver. You mine base metals and hope silver comes with it. If we enter a recession and copper demand falls, copper mines close, and the silver supply vanishes. We are walking a tightrope over a canyon. Stage 3. Recognition of deficit. We are here right now. This is happening in real time. In 2020, the COMEX had 400 million ounces of registered silver. Today, under 60 million ounces. 60 million ounces equals less than 3 weeks of global consumption. The Silver Institute confirms 3 consecutive years of deficit. Physical premiums rising, delivery times extending. The paper market is the greatest Ponzi scheme in history. For every 1 ounce of physical silver in the vault, there are up to 400 ounces of paper silver traded. Banks like JP Morgan and Citibank sell contracts for metal that doesn't exist to smash the price down. They call it tamping. But let me explain the fraud of the unallocated account so you understand the risk. Most investors think they own silver because they have a line item on a bank statement or an ETF. You own nothing. You own a claim against a bank that is leveraging your deposit to bet against you. It is called rehypothecation. They take your bar, lease it to a short seller, who sells it to someone else. That one bar is now effectively owned by 5 different people. When the panic starts, 5 people will show up for one bar. Who gets it? The one who holds it in their hand. The other 4 get a sorry letter and a front row seat to a bankruptcy proceeding. If you can't hold it, you don't own it. It is that simple. The paper silver market is a game of musical chairs played on the deck of the Titanic. And the music just stopped. Stage 4, panic. Not here yet, but close. What does the next phase look like? A major industrial player, a Tesla, a Samsung, a Raytheon, publicly announces they cannot source enough silver. That triggers the cascade. Other firms panic buy. They don't buy for next month, they buy for next year. They drain the dregs of the supply. Governments secure supply for strategic industries. They will nationalize mines. They will ban exports. And then, the digital leash tightens. Why do the elites hate silver? Why do they suppress it? Because silver is private. It is outside the banking system. It is anonymous. They want to herd you into central bank digital currencies, CBDCs. Programmable money. Money that expires. Money they can turn off if your social credit score drops. Silver is the anti-CBDC. It is freedom in physical form. As the fiat system collapses, they will try to lock the exits. They will make it hard to buy precious metals. That is why the window is closing. It's not just about price, it's about accessibility. When physical decouples from paper, when the industrial bid meets the monetary bid, when solar panic combines with currency crisis, silver won't rise steadily. It will gap. $50, $75, $100. The unobtainium phase. Picture the morning it happens. You wake up. Silver is up 15% overnight. You log into your bullion dealer. Site under maintenance. You call. Busy signal. You drive to the local coin shop. There is a line around the block. The owner locks the door and puts up a handwritten sign, buying only. No sales. That is what a stage 4 event looks like. It isn't a chart, it's a closed door. It's the realization that your paper currency is no longer good here. You will see a price on the screen, but you won't find a coin for sale. Dealers will have sold-out signs. Refiners will have 12-month waiting lists. But this time is different. Technology will save us. Let me destroy that delusion. Substitution. No substitute for silver and solar. Maintains efficiency at scale. Copper oxidizes. Aluminum doesn't conduct well enough. Recycling? The recovery rate from electronics is below 20%. It is too small per device to be economical. It costs more energy to recycle the silver from an iPhone than the silver is worth. That metal is lost to the landfill. Solar panels last 25 years. That silver isn't coming back soon. New mining takes 10 years to bring a mine online. The EPA regulations, the permits, the lack of capital. We don't have 10 years. The deficit is now. And silver grades are declining globally. We have picked the low-hanging fruit. Now we have to dig deeper, for less metal, at higher energy costs. Demand destruction? The only way demand falls is if the energy transition stops. And the transition is mandated by law across Europe, China, and the United States. Trillions in subsidies committed. Entire industries retooled. This is policy. And policy doesn't care about silver prices. The Green New Deal is a suicide pact for the silver inventory. American exceptionalism will save us. Remember the 1970s. The most powerful country on earth, reserve currency, largest military, was brought to its knees by an oil embargo. Power doesn't exempt you from physics, from geology, from supply and demand. Silver isn't a policy tool. It's a finite element we're consuming faster than extracting. When that imbalance hits critical threshold, price adjusts violently. Here's what you need to understand. The pattern I've shown you is not theory. It's historical fact repeated across commodities, time, and systems. Complacency, inelastic supply, recognition of deficit, panic, oil, wheat, palladium, now silver. The machine is the same. The outcome is the same. The only question, do you see it before everyone else? Silver sits at the intersection of three unstoppable forces. The energy transition consuming silver exponentially. The monetary crisis driving investors to hard assets as fiat currencies debase. And the supply crisis with no solution in any time frame that matters. When these converge, and they're converging now, the price won't rise. It will dislocate. The COMEX will break. They will settle in cash. They will screw the contract holders. But if you hold the metal, you hold the power. I'm not telling you to sell everything and buy silver. I'm not giving financial advice. What I'm giving you is pattern recognition. Once you see the machine, you can't unsee it. Here's my challenge. Go verify this yourself. Look up COMEX silver inventories. Check IEA solar forecasts. Read Silver Institute supply-demand reports. Review mine production data. It's all public, all verifiable. And when you see the deficit growing, inventories collapsing, demand accelerating, you'll understand. This isn't hype. This is math. Math doesn't care about opinions, politics, hope. Consumption exceeds production. Inventories are depleted. Price must rise. That's the only possible outcome. And if you want to understand how we got here, how the financial system suppressed silver prices for decades using paper derivatives, who benefits from keeping silver cheap, and what happens when that suppression breaks, you need to be ready. What comes next is the largest wealth transfer in commodity markets in 50 years. The people who see the pattern, who understand the machine, who position before stage 4, they'll be on the right side of that transfer. Everyone else will wonder how they missed it. They will be holding digital currency that buys nothing, while the real world is priced in silver. Don't be everyone else. The window is closing. The signal is red. The panic is loading. You have been warned.